Hello and welcome to the very, very special episode of Budget with BS. We've heard and watched the Union Budget 2023-24 and now is the time to cut the clutter and understand it. And you've reached just the right place. Veteran journalist and editorial director of Business Standard, Mr. A.K. Bhattacharya, will decode the budget for you in a fascinating way as he gets into an exciting conversation with Business Standard editor Mr. Shailesh Dobhal.
Thank you, Nivedita. Good evening, viewers. Welcome to this special show on Budget 2023 on the Budget Business Standard website. Union Finance Minister Nirmala Sitharaman presented her fifth budget for the Narendra Modi government, and it was initially touted as a pre-election budget coming in a year before the general elections 2024. Broadly, the challenges and expectations from this budget can be broken up in four parts. First is the immediate challenge of navigating the economy in a scenario where global growth is expected to be anemic and trade, which is one of the key pillars of economic growth, is expected to be weak. Two, to continue past year's focus on public investments in order to crowd in private investments. Thirdly, whether the finance minister has done enough to address some of the long-running pain points like restoring livelihoods, which were lost during the pandemic years, and facilitating conditions to create that much-needed jobs for the India's teeming millions. And fourth and last, has the government leveraged a crisis like this to usher in much-needed next-generation reforms to build physical and human infrastructure? To discuss how far this budget has done on each of these four broad parameters, we have with us Mr. A.K. Bhattacharya, Editorial Director of Business Standard. Welcome, AKB, to the show.
Thank you, Shailesh, for having me here.
So I'll straight shoot the questions. What would you say is the big, broad message of this budget? Do you agree that this budget is fiscally prudent, that Nirmala Sitharaman, the finance minister, has walked a very fine balance between growth and stability?
Well, I think, yes, of course, it is a fiscally prudent budget. But it will also be fair to say that there are shades of election orientation in this, in a sense that she has achieved a rare combination of being both fiscally prudent and at the same time giving incentives, concessions to important segments of society through tax reliefs, through reforms, through expenditure push. Just to briefly point out some of the items which make me feel this way. Number one is the manner in which she is stuck to the fiscal deficit target of 6.4% for the current year. And as everybody had expected, she is looking at a fiscal deficit target of 5.9% for the next year, that is 2023-24. But while doing that, she is making sure that the quality of fiscal consolidation has got better. Now, this is something that is not often underlined or recognized, that while the fiscal deficit has come down from 6.4%, projected to come down from 6.4% to 5.9%, the revenue deficit, which is very many economists believe is actually a real indication of the government's fiscal prudence, is going down as per her projection from 4.1% to 2.9%. In other words, the expenditure side is seeing a big increase, 37% increase in capital expenditure, but on the revenue expenditure side, it is going up by only 1.2%. Now, this is the difficult task that she hopes to achieve. Not just reduction in the fiscal deficit, but also a reduction in the revenue deficit. And if I'm not wrong, barring the post-pandemic year of 21-22, this is the steepest revenue deficit reduction in 1 year that she is proposing. So it means that revenues must grow by over 11%. It also means that the revenue expenditure must just grow by only 1.2%. Now, that's a difficult task, and that's going to be a difficult challenge for this budget.
Yeah, that's very interesting. The whole world is focused on the capital outlay in this budget, and it's gone up 33% to 10 lakh crore. Do you think implicit in this government spending of 10 lakh crore is the understanding and acceptance that private investment would still take time to kick in?
It's a very important point you have raised. The current year, the government began with a target of 7.5 lakh crore, of which around 1 lakh crore was to be given to the states. Now, as the year is ending and the finance minister has revealed those revised estimate numbers, you see a very small marginal shortfall in that expenditure. It is going to be around 7.28 lakh crore instead of 7.5 lakh crore. 25,000 crore shortfall is not something to worry about, but nevertheless, it is an indicative of lack of adequate absorptive capacity of the government system to announce some big expenditure and not been able to pull it off. So to achieve 10 lakh crore next year, a 37% increase in a year, probably in a pre-election year will not be difficult. But remember, this is capital expenditure. It requires a lot of planning, and 1.3 lakh crore of this 10 lakh crore will be spent through the states. And that expenditure is linked to some conditionalities as well. So therefore, the government's ability to achieve that number is something that we have to see, watch, and how it actually pans out. And of course, to answer your question, it acknowledges that the private sector is repairing its balance sheet. It is coming back into its investment cycle, but probably it is too early to expect that the private sector will be able to fill in that gap which the economy needs to plug.
Oh, interesting. Yesterday was the economic survey, and though it didn't say it in so many words, but implicit was that nominal GDP will be 11% according to the economic survey. The budget today makes us understand that it will be 10.5%. Do you think there is a dichotomy that needs explanation there?
Well, yes. I mean, apparently there is a dichotomy, but there's continuity as well. The continuity is that the finance minister has shown, at least for the last 2-3 years, consistently that how she is under promising and over delivering. If you look at in each of the last 2 years, she is projected very modest growth in revenues, and she is doing it again this year. And hoping that at the end of the year, she will surprise everybody on the positive that you have achieved those numbers. So I think you are right that there is a disconnect between the first advance estimate of the National Statistical Office about the Indian economy's growth and the economic survey's growth for next year. But I think this is something to be seen as part of the government's budget strategy. Like in the Indian corporate sector, you have got guidance management. I think the finance ministry does this under promising and over delivering rather well, and they have done well in the last 2 years. And you can see the numbers in the budget for this year as well.
Absolutely. The finance minister announced a lot of changes in the new income tax regime. The slabs itself were changed, the rates were changed, and she also said that the new income tax scheme would be the default scheme, hence on. Do you think these measures are enough to get some traction finally on personal income tax, the new regime, or would it be too little, too late?
Number one is that this is an acknowledgement that the scheme that was announced in the end of 2020 has not made much headway. Clearly, the government with 6 rates did not find too many takers among the individual taxpayers. By reducing the number of rates to 5, and reducing the rates in some of the slabs, actually between 9 and 12 lakh income category, the tax rate is quite steep by 5 percentage points. So you will see quite a few people probably will go in for this exemption-less tax regime in the hope that they will be able to save on their taxes.
Oh.
Also remember that the tax-free state, the rebate, the level has gone up to 7 lakh, which is if you earn up
From
to 7
5 to
lakh,
7 lakh,
there is no tax if you provide. So I think on the whole,
but that's only on the new income tax.
On the new income tax regime, the government is trying very hard, very clear from this budget that they want the new tax regime to work, and that will be the tax regime for the years to come. But from next year, income taxpayers will have to make a choice, a clear choice, that whether they want to go in for the old scheme or not. Unlike previously, where they had to make a choice whether they want to go in for the exemption-free scheme or not.
Now, together with these new income tax scheme exemptions and she bringing down the highest tax incidence in the personal income tax from 42.7% to 39%, do you think this would be enough of a consumption kicker in the economy?
Well, if you look at the total number, around 35,000 crore could be considered as a kind of a fiscal stimulus, which will be left with the middle class Indians. That they can use that money for either through savings or through investments or to spending at a time when the Indian economy does need some demand push. So you could say that it's a small amount. 35,000 crore is not a big amount for an economy which is 300 lakh crore.
Which is the tax per one.
Yeah, exactly. So it will happen. But the interesting point that you will probably note is that this is a tax revenue foregone, not at the cost of the states. So there is a positive element to this, because the surcharges have been brought down.
So the center is taking the hit.
Center is taking the hit, not the states. So in a sense, taken together with the fact that instead of 1 lakh crore, 1.3 lakh crore will be sent to the states under the capex program. Similarly, the high net worth individuals, the tax liability will come down from 42% to 39%, but not at the cost of the states. It is a center which will take the hit. So it's a good sign from a federal point of view.
Interesting. Creating jobs has been the top of the agenda, the political agenda. Do you think this budget has done anything meaningful there?
Theoretically, when the capex goes up from 7.28 lakh crore to 10 lakh crore, when states get more money from the center, either by central transfer or through the capex, those 50-year interest-free loans, or by increasing expenditure under the PM Awas Yojana to around
79,000
crore. I think jobs will get created in those segments of the economy which do need jobs. Whether that lead to formalization of the economy or not, whether they create other positive spin-off effects for job creation, is something that time will tell.
Okay. There are a lot of things for the gift city that the finance minister announced to make it more attractive for foreign investors, and one of them was allowing banks, and initially foreign banks, to start funding for mergers and acquisition, which is not allowed in the domestic market. Do you think this is the first step towards going forward in this direction?
I think you are right. It's testing waters. So I mean, you will see it through the gift city. It also gives a boost to gift city. But on the financial sector side, Shailesh, there is a lot in this budget in terms of the rewriting of the regulation laws by the central bank regulator, the insurance regulator, the markets regulator, and at the same time proposing amendments to the RBI Act, the
Banking Regulation Act, the Banking
Companies Act, indicate to me that there's something else that is being planned by the finance minister, whether it is a question of privatizing those banks, because the finance bill does not have any provisions on any the amendments that the finance minister announced this time. So you do not know what will be the nature and the contour of those changes in those three financial laws that the finance minister mentioned in a budget speech.
Okay. There is a disconnect between what the finance minister apparent disconnect between what she has done for the rich. On the one hand, the top slab has come down from 42 to 39%. On the other hand, she has taken away the capital gains offset on luxury housing. Anything above 10 crore in terms of capital gains cannot be offset. And similarly, for high-end insurance policies, term plans, the same regime applies. So what is the rationale there?
I think while you give income tax concessions to the middle class Indians, particularly those below 7 lakh and even those who have below 15 lakh income, And you also give some relief to the high net worth individual by reducing their tax rates, but you also take away certain concessions by taxing them a bit, whether on their getting their capital gains exemptions, on the real estate this thing, and also the ULIPs that you talked about. But remember that this is a strategy that most finance ministers adopt. And it actually, if the stock markets, were bullish in the first immediate after the announcement, it was largely because that the finance minister stayed away from any capital gains tax regime change.
Yeah.
So the high net worth individuals or the promoters or those who are holding on to these stocks and capital, they will probably heave a sigh of relief that okay, my tax rate has come down, my capital gains exemptions on real estate acquisition has gone away a little bit, but I'm safe from any uncertainty on the capital gains front. She did not make even an announcement of her intentions, what she would like to do on the capital gains tax.
Okay. In a run-up to the election year, she's done something very bold in terms of she's cut subsidies on food by 33% and fertilizers by 23%. She's also announced that the free food scheme is only for 1 year, effectively December 2023. Now, how does that square up for a government going into elections next year? And is it for real?
Well,
it's a very bold move.
You must remember that when she presented her 22-23 budget, she did not budget for the extension of Pradhan Mantri Garib Kalyan Yojana. So this was actually imposed on her, and the budget had to bear the burden of it at least till December. So I think right now the numbers reflect that 1 year scheme. But you do not know as we complete the elections to 9 states and the results come out, what kind of mood the government is in, and whether that scheme is extended or it is ended at December.
Okay, so you keep coming on defense. In a scenario where geopolitical situation across the world is very uncertain, we have a situation on our border with China. The government has just spent subpar vis-a-vis the nominal growth in the economy, which is 10.5%, by just giving about 6% increase to defense expenditure from 4.09 to 4.33. Do you think
this is something that nobody can feel good about? The government must would make adequate provisions for defense outlay. The only thing by way of explanation from the government side would probably be that the government expects the private sector to pick up this area and expand more. The government has been making some positive noises to the private sector, inviting them to undertake these defense projects. So probably the government will expect the private sector to come in. But from the government side, a 6% growth, which probably is just neutralizing the impact of inflation. So in the real terms, there is no increase. So this is something which is certainly would be a cause for concern and will be debated in public forums.
Okay. Thank you, Akibi, for a lovely discussion. So much from the script. Do you want to put in a last word?
No, I think we covered a host of issues. The only thing that I would add is that you began the discussion with whether it was a pre-election budget or not. After our discussion, the sense I get is that the finance minister has managed to pack in a lot of pre-election stuff along with a commitment to fiscal prudence and consolidation. So it's I would say a competent job from a finance minister who's presenting the last full budget of our government.
Thank you so much, and thank you for watching, viewers.
That was a great conversation with so many takeaways. Mr. Bhattacharya rightly points out that the budget had pre-election written all over it. But the important point is that it's not just a populist budget, as it has displayed fiscal prudence as well. That, Mr. Bhattacharya says, is a rare combination to achieve. We are not done yet with the budget. Next Monday, we'll be back with a show that will highlight the fine print of the budget. Don't miss the concluding episode of Budget with BS. Thanks for watching.
If you like this video, share it and subscribe to Business Standard. For more news, views and insights, log on to www.business-standard.com. Do also follow us on YouTube, Twitter, Facebook, Instagram, Telegram and LinkedIn.